Hello friends, welcome to A to Z Learning channel. Today in this video, we'll talk about Yes Bank's latest financial results. They published their results earlier today and we would help you understand what are the key highlights of those results in a very simple and a user-friendly manner. So the quarter that we are looking at for the purpose of this result is the Q1 of the current financial year, which started on 1st of April 2022 um, and this performance is for the first quarter which ended on 30th of June 2022. There are some important updates on the Yes Bank as part of this financial results. So it's an important video if you are invested in a Yes Bank or you track this as a potential investment opportunity for you, then you don't want to miss out this particular video where we have talked about the key highlights from the financial results which are important consideration for the future return on the investment in Yes Bank. So without any further delay, let's start our video. So as I said, let's first talk about the key updates that the bank has provided to the stock exchange. And by the way, please note that all the information that I'm going to be using in this video has come from the NSE website. So if you go on the NSE website and look for Yes Bank, under the corporate information, you'll find the latest investor presentation which is posted there. So I have used all my data from that investor presentation, which is available to you guys as well if you are interested in a more detailed update on the Yes Bank's latest financial results. So coming back to the update, so the key information that you as a investor in Yes Bank or you as someone who's looking to potentially invest in Yes Bank need to note three things. The first one is the good news that bank has successfully come out of reconstruction scheme. You would recall a couple of years ago, there was a big question mark on Yes Bank. There was a huge NPA and RBI had to engineer a bailout for Yes Bank. There was a moratorium on the withdrawals of the deposits on Yes Bank for almost a month. And even the shareholders who were invested, their shareholding is still subject to restriction in terms of their ability to sell those shares. So all that was put, SBI along with some of the other private banks uh, led this bailout and infused huge amount of money in the Yes Bank to basically help it survive. The good news is that reconstruction scheme that RBI put together as part of that reconstruction scheme, they appointed two additional directors on the board of Yes Bank. That has that is now finished. Yes Bank has come out of that effective July 15th, so a week ago. And now the additional directors that RBI appointed on the board of Yes Bank, those have been withdrawn, and now alternative board has been constituted, which has got 6 independent directors, 2 non-independent directors, and of course Mr. Prashant Kumar, who's their MD and CEO, is also a board member. The second important thing is that Mr. Prashant Kumar has done a fantastic job in terms of really, um, I guess, reconstructing this bank, resurrecting this bank, um, and the alternate board has recommended for Mr. Prashant Kumar to kind of continue in the position of MD and CEO for another 3-year period. It's subject to RBI approval and the shareholders approval, but at least that's the recommendation from the board. Then the third most important thing, as you know, the Yes Bank is struggling in terms of huge book of stressed assets. 48,000 crore worth of stressed assets bank have successfully again signed a binding term sheet with a partner, JC Flower Asset Reconstruction Company. As part of this arrangement, these stress assets will move away from Yes Bank's balance sheet into this asset reconstruction company, and bank will get decent valuation uh, of these stressed assets, and bank will hold 20% equity also in this new asset reconstruction company. I think that in a simple manner, I would say it's a great opportunity for Yes Bank to have a fresh start. It's almost kind of taking out all the stress assets away from the balance sheet so that bank looks like a good bank, and from that good bank position, they can start to kind of grow rapidly and really become the sort of bank we used to believe Yes Bank is. So these three developments are most important developments. So as an investor, you must make your decision keeping in mind these three developments. So it's a very, very important update. Now let's talk about the financial results. When I look at the financial performance of any bank, I look at two, three key parameters. The first thing that I look at is the net interest margin position, which is right here, as you can see. The net interest margin is 2.4%. It's below 3%. Anything below 3% is not good. But if you look at the journey on which the bank has been, it's fantastic performance. It's consistently improving. A year ago, the bank had NIM of only 2.1%. Now it's 2.4%. So it's improving consistently. That's good story. The second thing that I look at is, of course, the net profit picture. Um, on a net profit picture, if you look at year on year, the bank has performed really well. The bank reported about 200 crore worth of profits a year ago in the Q1 of 2022. And this year, in the current quarter, Q1 of financial year 23, they have reported 311 crore of profit, which is 50% higher than last year. So again, fantastic performance there. There is a little, I guess, something to highlight here, which is not so good. Last quarter, bank reported a better profitability. So the Q4 of last financial year versus Q1 of this financial year, the bank's profitability has gone down. I did look at a very detailed kind of financial statement of the bank. In my opinion, there are two things that are driving that. One is their expenses are higher. Expenses are higher because they are making investment in the technology. They're also um, the other thing, they're also making investment in terms of their people, and the number of salary increases that they had to consider. All that has resulted into increased operating expenses for them, and that is dragging the profitability down. The other thing which particularly kind of stands out for me is their non-interest income is down by about 100 crore, and that's another reason why Q on Q the profitability is down. Q1 the non-interest income is down because I think they had to take a huge loss, about 50 crore loss due to mark-to-market practice on the some of the investment that they hold. So that's the net profit, which is the second important criteria. The third thing that I look at is the CASA ratio, which is basically the current account and saving account deposit as a percentage of their total deposit. Um, and there they stand at 30.8%. Again, relative to last year, it's an improvement of 3%. It was 27.4%, and it's great that bank is moving in the right direction. But relative to last year, it's gone down slightly, and that's not great. And that's worth highlighting. Their deposits are slightly down. And again, when I looked at a deeper look at the uh, balance sheet, I found that their current account growth Q on Q is not good. I mean, their current account deposits are down. Those saving account deposits are up. So that's the reason that led to their CASA ratio being slightly down. But I think overall it looks really good story still. Then the fourth piece to highlight in their financial performance is their net NPA, net non-performing assets. That's a positive story, whether you look at year-on-year performance or quarter-on-quarter performance. Both criteria, bank is showing consistent improvement of reducing their non-performing assets. It's still high, 4.2%. I think any good bank has to have less than 1% as the net NPA. Um, they are much higher, but I think we need to keep in mind that the bank used to have 6-7% sort of NPAs. Even last year, the same quarter, they had 5.8%. So from a 5.8%, they are now down to 4.2% in a matter of 12 months. That shows the kind of significant progress the bank is making under the leadership of Mr. Prashant Kumar. So that's important message. Some of the other kind of key things to kind of highlight, advances continue to grow, assets continue to grow, disbursements continue to grow. Return on asset is better, 0.4%, though slightly down from previous quarter, but year on year up, which is good. So overall, I would say banks' financial performance is consistently improving. They are not out of the wood yet, but they are on the right path. It's going to be a long-term journey, we knew with Yes Bank, but they are on the right path on that long-term journey. Now let's look at the some of the broader kind of strategic view in terms of where the bank stands. Bank itself has said, given their guidance for financial year 2023, for example, they want to kind of keep end the, I guess, financial year 23 at with a CASA ratio of 35%, which is considered a good level of CASA for any good bank. They are just below 31%, so they remain on track in terms of their CASA performance. Um, if you look at the retail and corporate sort of loan mix that they have, their book of business used to be heavily weighted towards corporate loans. Almost 40% was retail and 60% was mixed, but they had this guidance that come 2023, they were going to achieve a 60-40, where 60% is retail and 40% is corporate. They have already achieved that. As you can see, they are 62% versus 38%. Even last year, when the way they ended the year, they achieved that target of 60-40. But they kind of set in a stretch target of improving the mix by 400 basis points further. So again, in that they remain on track because they're already um, 200 basis point on that journey. So 200 more to kind of go. One other thing to kind of highlight is basically their advances year on year growth is 14%, which they want, the guidance is to be above 15%. Similarly, some of the other benchmarks. Overall, I think on this page, the story that stands out in my view is that on the strategic objectives of basically restructuring the bank, repositioning the bank, they remain solidly on track with those guidance. Either they are on track or they have already achieved, but now going for stretch target in those areas. So overall, very, very good story here as well. So I hope this quick overview on the financial results of Yes Bank and the key updates on Yes Bank has been helpful for you. If you think we are doing a good job, then please do let us know by pressing the like button on our video. And if you've not subscribed our channel A to Z Learning as yet, then I would urge you to please subscribe our channel A to Z Learning and become part of our viewers community. Thank you so much for watching, and we would look forward to your comments and suggestions on the content that we are producing for you.